What's up, guys? It's Nathan here. Today, we're going to look at the Australian property market, and despite recent rate hikes, the market has shown a remarkable resilience with auction clearance rates across major capital cities soaring. We're also going to unveil the unique reliance on family wealth in the Australian property market and how an intriguing resurgence of Chinese investment is coming back. Let's start off on the top. Amidst the latest interest rate hikes, Australia's capital cities have surged in auction clearance rates, hitting a 15th-month high over the previous week. Even auction volumes continue to rise with an impressive 75.3% preliminary clearance rates reported across the 6 capital cities this week. It's clear that the market is resilient. There are certain patterns that are emerging within the bustling market. Sales appear to be skewed towards buyers that have support through family wealth. This trend has become more apparent since the market began to recover in March following a 10-month period of decline. Now, the market continues to gain momentum, and even in the face of the Reserve Bank's unexpected 11th rate rise this month. For instance, in the bustling suburb of Hawthorn East in Melbourne, potential buyers are bringing their parents along to auctions. This trend was exemplified in a recent auction of a 2-bedroom property in Melbourne, which sold for a staggering $100,000 over the reserve. The successful bidders, a home buyer couple, had financial backing of their parents, something that seems to be becoming a common occurrence in the current market landscape. And if you find value in this video, please consider hitting that subscribe button, as it really helps out the channel, and a big thank you to all our subscribers for your support. Inspires us to create more content we hope you enjoy. Turning our attention to the city of Melbourne, which held the most auctions over the week according to CoreLogic, also had a preliminary clearance rate of 77.4%. With this high clearance rate, even as the number of auctions increased by 12%, or 834 auctions in total. Economists suggest that the Reserve Bank may not be comfortable with seeing these numbers. Why, you might ask? Because housing prices influence how wealthy people feel, which in turn affects how consumers spend. Higher property values lead to increased consumer spending on goods like cars and furniture, while lower property values have the opposite effect, which can help curb inflation. Therefore, a robust property market might be the cause for concern for the central bank. In Sydney, both auction volumes and clearance rates both rose, with a 78.2% preliminary rate, the highest in the country. Adelaide followed the second strongest clearance rate at a figure of 78%. It's worth noting, whilst the current property market pickup seems promising, there is always risks associated with continually rising interest rates. This could potentially exhaust even the most resourceful of parents looking to support their children's housing purchase dreams, and leading to the bank of mum and dad getting tapped out. We've also seen on the flip side of this the ebb and flow of the property market exhibiting some downward trend, particularly in areas that are most affluent in the regional sectors, which experienced a massive influx due to relocation of city dwellers at the peak of the pandemic. This movement has been characterized by gentler market prices, extended periods on the market, and larger concessions from sales. In examining the quarter's performance of the top 25 largest non-metropolitan regions, CoreLogic's regional market update reveals that there was a notable drop in regions that recorded a rise in their housing values in the year leading to April, only 7 to be precise. One exception to this decline is southeast area of South Australia, including locations such as Kangaroo Island. Here, an annual increase of over 10.8% was witnessed in the housing values till April of this year. On a similar line, the regions of New England and New West, New South Wales and Bunbury in WA have also fared well with 4.9 and 4.8 increases respectively. However, in more desirable lifestyle locations such as New South Wales, Richmond Tweed and the South Highlands and Illawarra have faced the brunt of the downturn. These markets, which were significantly boosted during the pandemic due to large-scale metropolitan regional areas, have become especially vulnerable to the increased cost of debt and stabilisation of migration trends, which have led to a decrease in house values. The Richmond Tweed region of New South Wales, far north Queensland, also are glaring examples of this downturn. After an impressive surge of 51% in property values during the pandemic, factors such as higher prices, rising debt costs, and lasting effects of the 2022 floods have caused values to plummet by 24.2% within the year to April this year. This region also saw a drastic decrease in annual sales activity and a surge in vendor discounting rates. Units, on the other hand, are experiencing a diverse trend. In the Riverina region in New South Wales, the largest annual increase in unit values of 19.8% was seen in April 2023, followed by Cairns and Toowoomba in Queensland with an increase of 15.2% and 13% respectively. However, Richmond, Tweed and New South Wales and Geelong suffered significant annual declines. And despite the broader downturn, some regions remain resilient. Economically buoyant rural markets, thanks to activities in mining, agriculture and tourism, along with factors like affordability, low listing levels and increased regional migration, have resulted in stable, albeit mild, value growth. Moreover, a recent surge in quarterly house figures in popular commuter markets such as the Gold Coast in southeast Queensland and Newcastle in New South Wales show promising signs of recovery. Factors such as limiting stock levels and anticipation that we're near the height of the rate tightening cycle, as well as improved consumer sentiment, have been instrumental in maintaining a healthy lower limit on values across these markets. These commuter markets, which usually lead to the property market cycle, seem to have hinted on an emerging recovery phase. Strong regional migration has played a crucial role in supporting demand in these regions. Trends also suggest that a reversal of migration patterns, with overseas migrants likely to overflow from Sydney into these regions. Once again, Chinese buyers are setting their sights on the Australian real estate market. Chinese buyers are reigniting demand in Australia's already vibrant property market, with interest spanning from lavish residence to student accommodations. Data from IQI, a top real estate firm, reveals a robust 127% increase in buyer inquiry from China this year for the first quarter compared to last year's first quarter. This positive trend is set to intensify. IQ's co-founder Daniel Ho projects a minimum 30% rise in Chinese investment in the real estate market versus the year before, despite potential challenges for Australian policymakers amidst a brisk housing recovery and 11 consecutive rate hikes within a year. This resurgence shows no sign of slowing down. And remember to like, share and subscribe to stay informed with all things property and finance. Chinese investors primarily focus on 3 to 4 bedroom houses. This prospect of post-pandemic family reunions in Australia keeps these buyers interested despite rising rates. Moreover, Australia's got a more favourable time zone, proximity, and its environmentally cleanliness amplify its appeal. Previous tensions between Beijing and Canberra resulted in temporary Chinese disinterest in the market, and they appear to be over. The impending influx of Chinese tourists and students is expected to augment the demand. The luxury housing sector, such as Sydney's 6-star Crown Resort, is especially attractive. Even with escalating interest rates, the Chinese enthusiasm for Australian property remains strong. It's clear that despite fluctuations and external influences, Australia's property market continues to demonstrate resilience and adaptability. From the increasing reliance of Bank of Mum and Dad to the recent downturn in the previously booming regions and the re-emergence of Chinese buyers, the landscape is dynamic and it is indeed fascinating. Moving forward, it'll be interesting to observe how these trends develop and how they'll shape the Australian property market. Here at Hunter Galloway, we're mortgage brokers and we get loans approved. So if you're living in Australia and you need assistance with a loan, we can help. We help with first homeowners, investors, upgraders, downgraders, and even refinancers. Get in touch with us at huntergalloway.com.au or visit our website, huntergalloway.com.au. We love to help. Guys, as always, thanks for watching, and we'll see you next time.